All right, what's going on, family? Welcome to another backtesting session. So it's November 4th, 2021. So I actually happened to catch a little bit of this trade, made some money. I also caught this small sell candle here. Let me show you. Then I'm going to show you exactly how I got there. Give me a second. So price did sell, but then they recovered this imbalance candle, and then it sold a little bit here. So I made some decent money in this candle here. Then price sprung up into a buy. So I believe I probably have bought into, I think it up in this area. Made some money and then jumped out. So I'm going to show you guys this process on how I got there. So let me go ahead and activate my back testing tool. And then let me turn off my autosave. And so I'm going to show you guys exactly how I got to this point. So let me grab my rule paper here. So now, typically when I'm doing my markups, I basically start marking up the 15-minute to the 4-hour time frame. This is me marking up market structure. So let me go ahead and turn all my indicators off. I'm going to get started on this process. So then I'm going to erase everything. So then at this point, I go all the way back to the beginning of the chart. All right. And that's when I start marking up from the 15-minute to the 4-hour. 1 second. I'm gonna pause this recording until I get to the beginning. Be right back. Okay, so we're at the beginning. So basically, when we go 6 months back on the 15-minute time frame, we go all the way back until TradingView doesn't record price anymore. So we can see that here. And then from here, this is where we actually start marking the market structure. Now I mark a market structure based off of imbalance moves. So like we saw a huge imbalance drop here. So this is where I'm going to draw my first market structure, and that's right there. Because this is when the banks actually made their move. And then I'm going to mark another one here. Then another one here. And then basically I go up to here. I could have started from the bottom and worked my way up. Normally I do, but I'm not going to worry about it this time. So we see that price hit this zone once and then twice, and then came down and hit this zone, and then sprung up an imbalance move, which was a huge uptrend. All right. And then we see another one here. And then we got one here. Another one right here. This is a good one here. Another one up here. Now, once I do that, then I take the rectangle tool and I draw my rectangles here, top to the bottom here. Now, then once I do that, and I draw my market structure all the way across price like this, then I'll go ahead and move on to the 30-minute. So let me pause this recording and do that, and then I'll be right back. All right, so we marked our zones on the 15 minutes, so we're gonna go to the 30-minute. So that's gonna be next. Go to the big screen here so we can see, right? So then I'm gonna put a vertical line here. And then we're gonna start marking up market structure from this point up, and this is gonna represent the 30-minute. So I could put one right here. I'm gonna make this green. Post the next one right here will be good. Post one right there. One up here. One up here. All right. So then we're going to do the same thing. We're going to draw our zones on these lines. I'm going to make this clear green. We'll do that right here as well. Next one's going to be right here. Right here. And then up here. So I'm going to change the coordinates of these zones and then we'll move on to the 1 hour. Be right back. All right, so you can see I marked up these zones on a 30-minute. Hope I didn't mess up on my autosave crap. If I did, I'm not going to worry about it. I should be fine. So we're going to go ahead and move on to the 1 hour. All right. And so this is what we have left to mark up on the 1 hour here. Right. So vertical line here. We're going to make this red. To the top here. And then we're going to do the same old process. Mark these zones under. All right. So I'm going to pause this recording. And then we're going to move on to the 4 hour. Be right back. All right, so I've marked up the 1 hour. So we're going to go ahead to the 4 hour. So when we look at the 4 hour here, we see we have everything marked up. And so we see that price is pretty much close to being overbought at this point. So it's realistic for me to actually draw a zone here that's going to represent the overbought zone. Okay. And this is going to be our supply, our supply zone. So then now that we see that, there's nothing else to mark up. Then we're going to go to the 15-minute. So now in realistic terms, we have marked up pretty much everything at this point. So the first step is done. So the second step is that I like to analyze the trend and identify exactly what price is doing. So when we look at price here, we see that price trending upward and caused an imbalance. So it went into an uptrend, then it started consolidating, did one small bull run, and now it's consolidating again. So when I see consolidation, my rule of thumb is that I don't trade consolidation. I want to wait for a breakout. And typically that's what we traders always teach our students, is that when there's consolidation, you don't trade it, you wait for a breakout. So in order for me to wait for a breakout, I turn on my higher high and lower low strategy indicator. All right. And so when I do that, I look at the most recent high and the most recent low. So we see a lower high here and a higher low here. So then what I like to do is I like to take my horizontal lines. All right. And put it there. So that way I can identify break and retest. All right. So the top is going to be the demand zone break and retest. And then the bottom is going to be the supply zone break and retest. All right. Now, I didn't mean to save that, but it's all good. I think I can still go back. If not, I can actually mark it up because I remember what I did. So at this point, I'm going to turn this off. So then my rule of thumb is that, okay, I'm waiting for price to break either one of these. And that's what's going to prompt me to either sell or buy. Okay. Now, the next step is to actually locate imbalances in the market and order blocks. And that's when I actually turn on my order block indicator. And so just as I suspected, this run here created a lot of imbalance in the market. So then I use these as take profit zones if price ends up going that direction. Because when you understand imbalances, this is institutional. When you understand imbalances causes deficiency in price. So what that means is the banks are going to actually have to fill these imbalances that this trend created, because there are cells in the market that were not filled, and they have to refill those and give other buyers and sellers opportunity to sell, to participate in the market. And then also ultimately they need to fill these orders in so they don't lose any money. So what I do next is I basically, just mark these up so that way I can see. Change these here. Change these to blue. Because then in my mind, I get an idea more likely where the banks are going to send price next. All right. Then it helps me to figure out, okay, which way they're trying to go. So now that I have identified these imbalances and highlighted them, then basically the next thing I do is I say to myself, okay, so if the banks, if price break and retest at the bottom here, more likely they're probably going to fill this imbalance here and probably fill maybe 50 or most of it, and then probably drive price up to create an all-time high, and then eventually bring price all the way back down to fill these imbalances here. All right. That's a possibility of what they're going to probably do. There are some situations to where, depending on the trend, the banks might probably automatically make price sell and hit these imbalances and then bring price up. But I solely believe that, this is the most recent trend here, uptrend. So they're going to have to at least fill this imbalance area from here to here before continuing to bring price all the way back up and create an all-time high. So knowing that, so this is what I do. I take my risk to reward tools, okay? Right here. And then ultimately, I think to myself that they're going to want to try to at least fill this imbalance. So I'll make this take profit 1. Now in NAS, this is probably at least, this is almost 200 points. I'll probably just bring the 200 points down to here. But this is almost 200 points. So 200 points could be, a $200 to a $250 profit in NAS. So then that's where I would actually set my take profit. Maybe even bring it maybe down to here. Take profit 2, just in case the price continues to keep on going. It does happen. But if not, then at least we can take profit on this first imbalance that needs to be filled. And then what I do is I take another risk reward tool, put 1 for a buy, because that way, if price decides to, for whatever reason, just buy up and break and retest this line, then it's probably going to hit this zone and be considered overbought and it starts to sell. All right. So then I would basically put my take profit up to here. All right. And then my stop loss here. And so then at this point, this is where I actually, set all of my take profit alerts and do what I want to do. So that way, if price decides to sell, I can put in my stop loss and take profit instantly into my MetaTrader 4. Once the EMAs cross on the Delorean EMA indicator, I'm about to turn it on in a minute. But that's how I jump into the trade, by getting extra confirmation from the EMA cross off of that indicator. And then when I see that the EMAs are getting close to crossing, and that's when I decide to put in my stop loss and take profit according to which direction it's going. So if it looks like it's going to cross selling, then I click this, go ahead and paste in my stop loss and take profit, and then I'll hit sell when I feel like I'm in a good position, and then vice versa with the buy. All right. So then the next step I do is I actually turn on the Delorean EMA indicator. And the way this indicator works is that anytime when the yellow EMA crosses over the red EMA and it sticks out and is open, more likely you have yourself a very good sniper candle to get into, or a sniper trade. Okay. So that's the very next thing that I do. So what I did at this point is see. Let me zoom on in and try to get all the price. Just get it real good. This might be too big. I'll just bring it down to here. Let me pause this recording until I can get the right. Okay, I'm back. This is probably the best I can do. Just trying to zoom in so you guys can see current price a little bit better. Maybe this might work. I don't know. I'll zoom out a little bit more. We'll just do it like this. So then basically what happened is we're going to play the replay tool, and I'll let you know when I got in. So price started, consolidating ultimately, and then it started dropping. Now I was waiting for the next candle to close below. So I kind of actually missed this entry, but I'm glad I did, because I wasn't sure if price was going to retrace and close below and then ultimately sell down. But realistically, now looking back, if I would have got into the sell, I would have got me a bag here, but that's fine. Then they bought price back up to fill at least 50% of that imbalance, because this is an imbalance candle. And then notice there was an imbalance here. So they filled that up. So they hit that. Then the next candle closed below and it was filled. So you see it disappeared. Okay. So then I jumped in on this candle and actually made a profit. Okay. And so I jumped in on that candle, and let me do this real quick here. I'm going to show you a screenshot of what I made. But the candle, and so this candle formed, and then ultimately it actually dropped down to here and hit my first take profit here. So really, when we look at this wick, it was a total of 275 pips. So let's actually go back. So I actually started, from here all the way down to here. Let me do it. So about over 280 pips. So I got a very good, decent bag off of that, even though I was trading at a small position, but it was a decent bag for a small position. Then after that, price instantly bought up. So my theory was right. I said to myself, they're probably going to want to fill at least the other 50% of this imbalance down to here before buying price up and create an all-time low. All right. And then eventually bring the price back down to fill all these other imbalances. So I knew that from the gate. What did price do? Price bought up. All right. And so it was buying up. I said, wow, price actually did what I thought it was going to do. And I was thinking about actually jumping in for another buy. But what I was waiting for is I was waiting for price to break above this ultimately, and really even break above this, because if we turn on the higher high and the lower low risk strategy indicator, I was waiting for price to push across this, but then I said it could hit this and then push price back. So ultimately, I really waited for price to bust through this. So, so let's play this replay tool again. So you see how price busted through that. So then when price busted through this, then I jumped in for another buy. And I believe I made an additional, let me look, an additional $7 to that. First trade was 31 on that sell that went all the way down to here. So that was $37. So you can see that it created, a very huge imbalance order here, or trade or uptrend, but it ultimately went all the way up and created an all-time high. And I'm going to show you that right now. So let me turn this off. So let me save my progress. So then went up even further, and you can see how far it went, all the way up to here, even past this zone. It went even higher. So now it's considered overbought just about on the RSI. So it's safe to say we could just put this all the way up to here. So it smashed way past our second take profit on the buy. Went up even higher. Insane, right? Went up even higher. Crazy. Then that's when price started to reverse. All right. So that's how I traded it this morning. I was correct that price actually was going to, that the banks were actually going to, sell price to fill this imbalance order, because it was here at this point. Then I knew once they kind of filled this last imbalance that this last trend did, they were going to try to buy price up all the way up and consider it overbought. So that way they have more momentum and more of a cause to sell and bring price all the way down, and eventually bring it all the way down to cover these imbalances. All right. So when I fit the screen, go to current price, and you can see that, they're going to start selling to fill this imbalance and then maybe bring price up again. But then eventually it's going to come back down to these imbalances here eventually. All right. But that's how I won this trade. I'm going to show you proof that I won this trade. Let me share my phone screen here. Give me a second. All right. So as you can see, there's that candle that I caught in my take profit here. And that's where I made $31. Okay. And then when price sprung up and I got in on that candle kind of towards the not towards the end, but when price really started buying up past those points, and I jumped in for that trade, made an extra $7, and then just jumped out. So that was a $38 profit that I made that day. So we did good on that. So that's it for this back testing session on NAS100. See you guys tomorrow. Take care. Bye.